All right, welcome back. Daily profiles. We touched on weekly profiles. Now we are going to be touching on daily profiles. Now, just a heads up, this daily profile video will be about Forex. I will make a separate one. So the next video will be a separate video where we talk about daily profiles on the indices. So ES, NASDAQ, YM, etc. Because it's a little bit different. The basic premise behind it is the same though. So you will also benefit off of watching Forex if you are a futures trader. And if you are a Forex trader, you will also benefit off of that indices video. So don't ignore it, but just know we will have a separate video on Forex and indices. Because otherwise I feel like it will be overwhelming and all over the place. And that's not in line with our goal here, because we are here to have everything structured in a simple manner. So daily profiles. So first off, we need to, of course, understand the times of the kill zones. The kill zones are generally where we see volatility in the market. They are market sessions. So during those times is when we expect volatility. And of course, like I said in the previous episode, the day we expect volatility is the day when we have the economic calendar on our side. That is important to understand. So the economic calendar is, in my opinion, it is stronger than the kill zones. So what do I mean by that? I mean that the kill zones are nice. They are nice to have an indication of when to trade. For example, I'm a London trader, not because London has the best moves, not because London has the most volatility. No, because I like to trade London. I like to trade in the morning. That London is the morning for me. So I like to trade in the morning. And then afterwards, I like to be done for the day. So let me go over a trade I actually took on EU right here. So if we take a look at the daily, we came into this daily fair value gap. Now, right here, it is essential, if you haven't watched the previous episode on the weekly profile, please watch that, because I go over the economic calendar and the price action and the economic calendar needs to be in harmony. Now, what do I mean when I say that? We came into the daily fair value gap on a Monday, on a Tuesday, and on the Wednesday. And which day decided to expand? Wednesday. Why? Take a look at your economic calendar. And that is how I avoided losses on Monday and Tuesday. I took a winner on Wednesday. So right here, what did my trade look like? My trade was Asia session low sweep right there. We swept those Asia lows. Then we expanded higher. Now, what do I mean by this? We had a fair value gap higher right there. That is what I wanted to see. Because if we have a fair value gap higher in this leg, then I wouldn't expect these lows to get taken or to get swept. So New York was a bit of a consolidation. Then we expanded higher off of news as well. And then eventually we hit the target, which was that high right there. So let's break this down into an easier manner, applying the daily profiles. All right. If we look at the Asia session, when is the Asia session? It is from 8 until midnight open. So 20 until midnight open right there, 0000. That is all in New York Est, New York local time. So I have set at the bottom right, I have my time zone set to New York for TradingView. Why? Well, because all the times, all the kill zones, all the sessions inside trading, they are revolving around New York local time. So generally that is a misunderstood thing, because a lot of people think London session or London kill zone is actually London opening. It is not London opening. It is an algorithm that opens at that time. So summer and winter time, that doesn't matter. It will always refer to New York local time. So if London is now in winter time and London moved 1 hour back, then we wouldn't change the London kill zone. It would stay the exact same, because the algorithm always refers to New York local time. So London close, London kill zone is always referring to the same times based off of New York local time. Same for Asia. The Asia session doesn't change. It is always referring to New York local time. Let's dive into daily profile. So Asia, again, 8 until 00 aka midnight open. New York midnight open is always at 0000. Then we have London. London is 2 a.m. to 5 a.m. Then we have New York. New York is 7 a.m. until 10 a.m. Then London close is 10 a.m. until 12 a.m. And then afterwards, we start a new day and we start Asia again, London again, New York again, London close again, etc. Now, there are different characteristics of each individual session right here. The normal premise behind these kill zones are Asian range consolidation, London sweep of Asia low or Asia high depending on the higher time frame bias that we have. London makes the low of the day. New York retraces into what London created and then expands, and then London close makes the high of the day or somewhat the high of the day. That is the basic premise behind everything. You also have New York reversal. You will also see sometimes Asia making the low or the high of the day. There are different characteristics for different circumstances. How can we know which circumstance will play out? By knowing the higher time frame and by reacting to what price is doing. Simple as that. It is as simple as that. So, for example, let me guide you through this trade again. Right here, we had a perfect Asia consolidation. Asia lows are getting swept right there. Keeping in mind, we have this daily fair value gap. I'm not just trading off of the 15-minute here. I'm trading a daily continuation. So London creates a fair value gap. Whenever London makes a low and creates a fair value gap, so London has a fair value gap in it, New York will likely only be a retracement and won't take out what London has created. Will likely only be a retracement and then a continuation of what London already had established. That is a big point. What will London close do? London close is meant to distribute positions that are there. So what does that mean? It means that London close will take profit. It will take profit at what? At a liquidity point. Remember from the first episodes, we need liquidity from someone else. So in this case, where is liquidity? See these equal highs? There's liquidity. So what happens? We have a slight retracement right there and London close creates somewhat of a high. Now, generally, you don't want to be taking longs anymore in London close. You either want to be involved in London or New York, but London close is not necessarily where you want to be taking new long. If this was a bearish day, then London close might be a great opportunity for longs. Just like we had a bullish day here, this might be a great opportunity for taking shorts right there on the even lower time frame, a little scalp, you could say. And that's the same with what we just talked about on the weekly profile. Thank God it's Friday setups. This is your Thursday and Friday right there. And you can see the Thursday and Friday right here caps the week. And then we can say we started next week right here. We have a Monday and Tuesday expansion again. So the thank God it's Friday setup is right here. This move until we rebalance something inside that range again. Overlapping with what? This high, this breaker. And then we continue higher. So you can see that the same characteristics that we had on the weekly profile are actually applicable to the daily profile as well. Why? Because we have Monday, your consolidation, Tuesday, Wednesday, and your Thursday and Friday right here. So my trade, just to show you, was inside this London, covering the London lows right there, aiming for those highs right there. That was my trade. All right, let's give you another example of this week's price action. All right, right here we are on AU, aka Australian dollar, US dollar. Now, by the way, the indicator that I'm using is FX Market Sessions by Boy Toki. I'm sorry if I mispronounced that. That is the indicator that I'm using for this. Of course, I've customized it to my own needs right here. I have another indicator, as you can see, but that is a volume indicator. Why did I add this? It is if I only have this indicator, then this is constantly showing, and that's pretty annoying to me. So that's why I have another indicator right there. So that is the indicator that I'm using, but I normally I don't have any indicators on my chart. And the reason being, once you have the indicators actually integrated into your brain, you're doing this every single day, then you will automatically know if it's London, if it's Asia, if it's New York, etc. Your brain will pick up on it. You don't need to worry about it anymore. I don't have the sessions on my chart anymore. So what can we see here? This is not your typical daily profile, is it? And this is why it's important. Understanding the daily profiles, the same as the weekly profiles, it is not a thing set in stone. What do I mean by that? You have to react. You have to be able to react in this game that we call trading. So, for example, there are certain characteristics still, because the certain characteristics that are important here is, do we have fair value gaps in the lag lower? Do we have expansions already from previous sessions? And did we already come into a premium raise? So for example, right here, I was looking at AU, and AU came into this daily fair value gap, and we could target a weekly fair value gap that was sitting right there. So on the daily, we are coming into that daily fair value gap. On the 15-minute, what does that look like? We have Asia session coming into that daily fair value gap already. And Asia session already displaces lower. What is a displacement? A displacement is a fair value gap. We already have fair value gaps lower. Can we now logically expect London to take out Asia and then continue lower? No, absolutely not. What we could expect here is, like what happened, London either retraces and then expands lower, but London had no energy anymore to do it. So what happened was London retraces right there, and then eventually New York continues lower. And this is where you have to react, because in London, there won't be a great setup here. If you want to ride the expansion again, you have to get involved right here in New York. And this was a very, very, very clean setup actually. And again, at the end of New York, there's a small setup, but right here, once we are aiming for these lows, you don't generally want to get in anymore. Not in London close, because then you will see price action like this as well. And then eventually, again, same story. Asia has that expansion. Also because Australian dollar is, of course, more so an Asia pair. It is pretty volatile in Asia, so you will see a lot more volatility in Asia and during Asia. So that's something to be aware of, that when you are trading Australian dollar, US dollar, for example, you won't always see the perfectly clean Asia consolidation and the sweep in London, etc. No, that will not always happen. But that doesn't mean it's not tradable, because this is very much tradable right here. Same for this. This is very much tradable. Well, once we have reached that weekly fair value gap, it's of course a different story, but this is still very much tradable. The only thing that changes now is that this high is now protected, and we wouldn't expect this high to get taken out. Now, if this high didn't come into the daily fair value gap just yet and had no displacement, it would have been a different story as well. But this high came into the daily fair value gap already, displaced lower, and then we continued lower in New York eventually. So you could even say, right, that this is your Asia right here. London made the high of the week. London had displacement. New York had the retracement and the expansion again. And London close made the low there. The sessions change, but the story stays the same, right? It is constantly consolidation, sweep, expansion, retracement, expansion. Let me repeat that. Consolidation, sweep, aka your manipulation, expansion to the intended direction. How can we know the intended direction? Because of the higher time frame bias. Then we have a retracement into what? A retracement into some form of fair value gap, order blocks. It is that internal move that we talked about. And then what? We have the expansion again. We want to get involved in that internal move. So in a move right here. In this New York, that is where we want to get involved, because then we can ride the expansion again. That is important to understand. So again, what is needed here? Again, it is important to understand there's nothing set in stone. There are certain characteristics, but right here for the daily profile, and again, we will go into it deeper as well later on. After the indices daily profiles, we will dive into it deeper again. But right here, we need to understand the higher time frame first. Once we have a higher time frame established bias, then we can focus on the kill zones on the daily profile. The most important is, again, that higher time frame. That will lead you to your daily profile, etc. So let me give you another example. All right, here we are on GBP US dollar, aka GU, aka cable. So here we have a daily fair value gap. Again, this is also a trade that I took. Now, here we are going to be looking at a New York reversal. So you usually have either your London high of the day or low of the day, of course. In a bearish day, you would expect a high of the day to be made in London or in New York. Now, how can we know it will happen in New York? When we dive into the 15 minutes, and again, it is not that difficult to know if it will happen in New York, because all we have to do is react. So what can we see here? We have Asia, we have London expansion. It actually sweeps Asia low, sweeps Asia highs right there, but it doesn't create the high of the day, doesn't create the low of the day. Well, sorry, it actually created the low of the day right here, but eventually this is getting taken out to target these lows, of course. But right here, the main premise is that London didn't make the high of the day and New York didn't respect what London did, etc. Why not? How did I know at the time that this wouldn't get respected? Was it because Asia was a consolidation right there and we knew it was Asia, so we know Asia needs to get swept, etc. No, it was based off of which session, which kill zone sweeps into that daily fair value gap, aka comes into that daily fair value gap, and then displaces lower. That is all. That is how I knew it. And London, did it come into that daily fair value gap? No. Did Asia come into the daily fair value gap? No. So, which session or kill zone will likely come into that daily fair value gap? New York. What does that create? A New York reversal. Of course, this is your high of the day. Then New York right here, high of the day. New York expands lower. And right there, that is where I got involved. Right there. That was my entry, covering the high. And then aiming for new lows. Right there. Ahead of the day, I can have a great indication of which session will likely come into the daily fair value gap and then expand lower. Again, this doesn't have to be a daily fair value gap. Can also be a 4-hour premium array, can also be a weekly premium array, whatever. Can also be even a 1-hour premium or discount array. Ahead of the day, I can get a great indication because I can see where we are currently hovering. So for example, in the evening, I do an analysis. In the evening right here, this is around the evening for me. Then during this time, I'm sleeping. Right here, I wake up. I can see, all right, we are now here. London is a great opportunity, and that is already what I knew when I did my analysis in the evening. I already knew, all right, we are pretty close to that daily fair value gap. So London could indeed come into the daily fair value gap and then expand lower. London expanded lower without coming into the daily fair value gap. There was no trade for me. London had a retracement right there. And then what? New York came into that daily fair value gap. What does that make? Your New York reversal. It's reacting. This game is all about reacting and adapting. When this happened, that is exactly because I just told you I'm primarily a London trader. That is exactly when I will focus on New York, because New York came into the daily fair value gap and New York expanded lower. And then eventually, same story, London closed, etc. And then the next day, what did we see? We had Asia again. Asia already had an expansion. If Asia already has an expansion and a fair value gap in the leg, can we expect London right here to come all the way higher above Asia and then continue lower? No, that is not logical. Now, what is the difference? I can already hear you asking, what is the difference between this entry, for example? Because this could have been an entry. Very, very, very great entry right there. What is the difference between this entry and this entry? For example, in this fair value gap or even higher and you waited for it to come right here into that. What is the difference? Well, then we have to go back to the foundation. What is the foundation between our trades? Daily fair value gap. So we need a higher time frame context first. daily value gap. Where gets a markup maker cell model, aka a cell program, gets activated where? Once we hit a higher time frame premium array. What are we targeting when we hit a higher time frame premium array? A higher time frame discount array. What is the higher time frame discount array here? It is this swing low. That is the first higher time frame discount array. So on a 15-minute basis, what do we see? This is just a continuation because we already came off of premium array on the higher time frame right there. This is your continuation until we reach that discount array. So it's different because this has not yet came into a higher time frame premium array. And again, market maker models, that is something we will get into. So stay tuned. All right. So again, indices is something we will discuss as well in a different video, in the next video actually. Again, if you're trading Forex, the indices video will also be beneficial for you because it is the same premise, but I might have a little different insight. I might explain it a little bit differently, and that might make it click even more for you. So it's very important to understand and watch every episode. Again, you will not understand it by me just telling you it and watching Netflix after, because then this is simply just entertainment for you. If you want this to be education, you need to start to apply it, and you need to send me chart examples. Maybe even send me all your chart examples on an Instagram or a Twitter, but not in DM. Send me it on a timeline. So you actually tweet something, you do a markup and tag me in that tweet. Or you actually place a story on your Instagram and you tag me in that story, because DMs are flooded. They are all over the place currently. So once you actually tweet it to me or actually send me a story, then I will notice it way quicker. All right, so if you want to do that, send me your markups. I will review them and I will see you at the live stream on Sunday, 8:30 a.m. New York local time. Perfect. Thank you.